Good afternoon. This is Chris Brecher with a simpler stocks free video for June 30th, 2016. This is me from home, not from the basement of a airport in Austin. It's about 3:38, about 22 minutes before the close. And basically, I'm glad to be home. A little exhausted, but glad to be home. Today is all about the market doing another follow through, which we'll go through. But to sum it up, the ES is up about 33, NASDAQ up 76, Russell up 22, bonds finally taking it on the chin. They've had a spectacular run on the way up with the market rallying. Crude up 157, gold up 580, transports up 168. Advanced declines very strong, which was the indication that we weren't going to sell off and just to short every rally just blindly. Nikkei only up 170, transports, like I said, up 168. So what do we have in here? Number one of the things we mentioned in the premium video, in the premium live chat was this. When you cross on a 78 minute, and see on here on the left on a 78 minute, and then you show the 15 minute on the right, this kept a lot of people out of trouble. What do you notice on here? The second we had a moving average cross and an ATR trailing stop cross, doesn't mean you have to go long if you're really bearish long term, but you don't short. Look at the 15-minute chart. I use this ATR trailing stop all the time in here. On our simpler stock premium, we show the actual parameters, which I'm happy to show. Real easy. It's not rocket science. It's real. It's just on Thinkorswim for free. It's the 9, the 2.9, the exponential, even though this was invented by Wilders, and you actually have a drop down for Wilders in here, I don't use it. I don't think it's as good. So I go in and use exponential. I've then made it about 2 bars wide. So it's a little, the width is 2. Buy is red, sell is green. Don't ask me why it's reversed on Thinkorswim, but that's the way it is. But it's 9 and 2.9. One of the classes we have, and I'll go over when you even get that, is how to use the ATR trailing stop. But in its easiest form, check out how it would have avoided disaster. I can't tell you how many people on Monday and Tuesday actually on Tuesday when we open up, all they said was dead cat bounce. Every stream I read, I use StockTwits a lot. You had everybody from dead cat bounce. Everybody on CNBC and Bloomberg, dead cat bounce. What have we done? We have gone from here about let's say 1995 to 2060 on the ES. We've gone up 70 points, and it's amazing the psychology, how it changes. So right here you have CNBC saying dead cat bounce. Here they're saying, oh, it's even a better short. If it was a good short under 2,000, it's just a layup to short it here. Then you go up to 220, and they're like, well, it's a little stronger than we anticipated. And then you get up to like 2050, and everybody's saying, well, maybe we overreacted about Brexit, and maybe there's not going to be a Brexit at all. It's amazing how the psychology changes in here. Now, one thing you have to realize is if you put the ESs on just a 78, take the high, take the low, and then you go in here and you go to drawings. You go to Fibonacci retracement, you go up to here. All you see in here is where's the retracement? 50% is right here about 2051. So it's 2061. Close enough. That's the 61.8. But all it did was recoup a lot of that loss. And another thing, and I try to tell people all the time, is that when you get oversold, when long term, we've been in this big old bull market, that you cannot short in the hole. So let me take off this drawing. Give me a second in here. And this is what I want you to see in here. Take the ESs on a daily. The whole idea is this. Every time we get really oversold, we rally. Everybody on TV was talking about the 200 being such a big deal. And I explained and warned a lot of people on the premium, don't worry about the 200. Check it out back here. All I ask is, when has it worked? It hasn't worked whatsoever. And it doesn't work now. You could take the 200 off, but I use it with some of the other stocks. Some stocks it works for, not every one. So just keep that in mind. So where do we go from here? Number one, let me take off the pointer on here and put this on a normal pointer. And this is what I think. I think that we look like we're still oversold on an ES. I think the easiest incarnation is to wait until we cross something to even think of shorting. Now you might say, well, what happens if we gap down? And you know, that's always a risk. The key on almost all of these, put the ESs on the left and put it on a 15-minute chart. Now I'm going to show something completely unrelated, but this is the type of thing we're going to look for. I'm not saying to short Kellogg at all. I'm just showing you that this is what you're going to look for on a short idea. You want to look for something crossing under its ATR trailing stop and then forming like a bear flag under it. So by nature, you're going to miss the first move down. And that's just the way a lot of good traders do. They miss the first leg down, but then they jump on the second. Same with the ESs here. You might say, but I'll miss the first leg down. But if you jumped in too early, look how much you would have lost. So the whole idea is to wait for something like that. Now, a couple of things, and we talk about this all the time on the premium side, is watching the Russell, watching the NASDAQ, watching the transports. And something that is a little problematic if you thought that the all clear is in here, which I don't. I think this is just recouping half the loss. But put the transports up here on a 195 chart. If we can get it to work. And basically the transports haven't come close to recouping their losses really for the last couple of months. See that right there? This is here in this bottom quartile. This is half. That's a big deal to me. If you put this on a daily, you can get a better perspective. And I know it's a broken record talking about the Dow theory, but when you see this up near a new high and you have this down to where it was in March, this in March, that would put this down to 1950. So I'm still worried about it. Doesn't mean to just go and short everything. Wait for your triggers, and we talk about those all the time. In fact, as we're talking about that, I want to show you what Simpler Stocks includes. So it includes in here the chat room. For $7 trial for 30 days, you get the chat room where we go in, and every day from 9 to 10, we have where I'm live. And we've had just a tremendous participation. And I think if you see any of the testimonials on the site, it's been a great value for this product. Other thing we have in here is the premium videos, a lot more in depth than what you're hearing now. Email alerts where I show index and futures charts, stock trades, and some unusual option activity if I see it. I don't post 50 of them. I post just a couple, and they've worked pretty well. Other thing you have in here is the forum. It's sort of a message board type format where we can exchange ideas back and forth. But the one I thought you'd think was interesting is the on-demand classes. Almost every Wednesday I do a class on just different things, unusual option activity and so on. As you see on here, in here we have understanding correlations, trading with the MACD, reviewing the basics, and so on. And what we do is we have about a half hour to an hour question and answer, and then it goes into a video. And as you see in here, we've had like ATR trailing stops, the things I was showing you how to construct. We actually have an hour-long explanation. So I hope you can join us, take advantage of the offer. Have a great night. I will talk to you.